Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Yeah, that should be a good. Chris, if you could make a note in that, why don't we take that sound bite and just create our little intro theme for the show? Then you can run that every week right at the beginning. That would make that job nice and easy. Hopefully, maybe, I don't know. Guten Tag and hello together. Hello. Oh, Nure. Nure's our German bodybuilder dude. He had to lift a bus to get to watch a TRI show. Anyway, we saw a bunch of the Romanians. They're really active. That's a vaca. How would that go? That's a Portuguese vaca chicken. They're really tough to catch too. Anyway, talking on three different fronts. Actually, I got vacas from Romania. And we had a really cool time touring entire country of Portugal, and vacas from Germany over there who are bodybuilders. And we hung out while we were in what was that? Peniche? Nazaré? Whatever. Anyway, welcome back to the frivolity. No idea what the heck we're going to talk about here today. I don't think I ever know, but I'm sure somehow mysteriously I'll fill a couple hours of rant, and it'll feel like the time just poof, just drifts on by. Of course, this is our weekend show. Our show really is supposed to speak to our current level 1 audience. And any sort of follow-up. But I got to tell you, Grim is such a fantastic instructor. I'm noticing that the follow-up is thinner and thinner and thinner, and really I probably don't even need to really do it too much anymore. But always good to carry on the conversation. And then, of course, what ends up happening is I talk way too much. Somehow 2 hours just disappear. And we end up carrying it on into the Monday and Tuesday show. Sometimes even into like Wednesdays. It takes me forever to answer all the questions, but it's good. Hey, we've got lots of interaction. And always remember too, I'm just another schlub that's active in the markets. I've got a few years of experience under my belt, and I think I have a pretty good idea of how to speak to audiences. So put the experience together with public speaking skills. I think there's pretty good value that comes out of this. It's fascinating how this whole thing, though, hasn't sort of hit mainstream yet. I'm not quite sure why. I think I probably should try and maybe refrain from the swearing. I know Josh, he wants us to get the sort of monetization thing going, and we did it. It's just sort of like, well, they're probably not going to like all the F-bombs, Brian. So, mind you, that's half the reason why you guys love me so much, is I'm so irreverent. Oh, goodness. Oh, well. Anyway, try and have some fun here today. It's 11 o'clock on the White Coast. Of course, right around 1 or 2 o'clock, I like to hop in the Liam Mobile and give him a grand tour of the Lower Mainland. He really loves his car rides, so it's a privilege of mine to be able to put a smile on his face a good couple of days of the week and give him the grand tour. And if anything, I have to thank all of you. 10 years. Wow. March 2011, right? That will unfortunately be a weird event. And in each and every one of your lives, you will all remember different events, and they will change your life. So that event day, it's fascinating, right? So that's it's about 11 and a half years now. And it's fascinating how that happened right through that previous recessionary period, right? Of course, the fallout from the 2008 financial crisis. So Liam and I've lived this very odd world for the past 12 years, but it's been a real privilege for me to be able to try and help all you out. You have given me the ability to help support Liam with these kind of endeavors, our adventures across the lower mainland. So thank you, everybody. Thank you, Jojo, for putting all the pieces in place to let me be able to do this. So always trying to make a positive difference in your guys' life. I don't know whether it works or not, but that is my honest intention. So the level oneers are still in class and they're working away on their Q&A document with Grim right now. So I think they're banging away. I would like to, over the coming 2 or 3 weeks, articulate sort of the justification. I know that's not the right word. The significance of this platform that we've built, and then also too how the education program goes together with this really nicely. So I've been working away on that. I don't know whether we're really ready to show you in prime time or not, but one of our marketing consultants, I guess we'll call him, been working away on this user's manual for the site. It's just beautiful document. So really super excited to get that out into your guys' hands. Once you sort of have that kind of tool in your hands, then I think the site will become a lot more user friendly. So gotta keep banging away on that. The course material itself is constantly a work in progress. I know one of our level 2 instructors and I need to do some work together, so we got that on the go. We do, I can't really get into any details, and I know Josh, sort of our marketing guy, is planning on doing something mid-month into the end of the month. So by all means, keep your eyes peeled for that. Might be ways for you to get a discount and stuff on stuff going forward if you do like using the site or want to participate in the education program. One thing I noticed, and I do see, it's fascinating because, this is what should happen is I do see a lot of, and I even see a lot of TRI alumni. It's just the way that it naturally goes. But a lot of people are building a lot of educational material. Hopefully, the educational material that comes out of TRI alumni and sort of associates and stuff like that is done correctly. I hate when I have to go in and correct somebody for misusing a phrase. It drives me crazy. But anyway, it is what it is. And I would, ironically enough, I wouldn't be surprised if there's like spin-off sort of, businesses and stuff. I see it happening. It's just, it's capitalism. It's what's supposed to happen. But the one thing I don't see that I think is very unique about TRI, but I just don't know whether we're conveying it correctly or not. So please, in the comments, please feel free to reach out. And that's this whole idea of learning the process. What's involved? That's probably the big thing that TRI, I think that's what really makes us different, is this whole idea that, what we're going to try and teach you how to do is build and then run an effective small business. The small business happens to be in the field of trading. But that's the key that you're here to learn is how the hell do you build a small business and expect to win, right? And actually expect to turn a profit in the business of trading. And keep in mind, this isn't an easy business. This is actually a pretty difficult business. They always said, the guy that I learned technique TA from, actually not like just one part of TA, but many million years ago. He always called trading the one perfect business, and that's a great sales pitch from back in the 50s and stuff. because there's no overhead, no employees, right? But at the same time, too, the decisions come down to you individually. And if you can't control yourself, well, you got problems. And sadly, that's actually where a lot of people fail at this business of trading. So somebody was asking me recently to build a maybe like a half-hour pitch or so on why would you take the level 1 program. And I got to tell you, the number one reason is that we teach you the process of how to do this correctly. Well, and ironically enough, all of the little squiggly lines and stuff that you see on the screen here, a lot of that's actually completely irrelevant to the process. On this page, actually, there's one issue right here, this thing right here, this tool right here, that's actually the most important thing about the process. And that's this idea of journaling and actually keeping yourself honest in this game. You'd be surprised how many people cannot keep themselves honest. And if you can't be honest to yourself, then how the hell are you going to be honest to the people you work with in life and the people that you love? And actually, honestly, it's like, it's funny that I say that. I mean, the cool part about it is everybody that comes to TRI, me. I'm the worst liar. I can't lie because I'm such a fucking open book. And people, when I try to lie to people, they look right through me. They go, Brian, you're a terrible liar. It's so obvious that you're lying. So, because I just tell you how I feel, if somebody says something stupid, I'll go, now that was dumb. Everybody's like, that wasn't very politically correct, Brian. So, but, honestly, from one guy to another who's been trying to do, not only make my own nut in the marketplace, but then, take on this crazy job of I want to be a demonstrator of best practices, right? This one tool right here, and it doesn't even look that sexy, which is so ironic, right? Because I'm working through our fun little users manual, and even Josh himself wrote this not sexy, and there's no squiggly lines. But this one bloody thing, this thing called the trading journal, it is the one thing that's going to keep you honest, and it's actually going to help you in your adventure of building your small business of trading. And the thing is, you don't have to do it on here. I like the way that we built this out, and it's still a work in progress. Will it change over time? Absolutely. But I do like that we've got this tool available to all sort of new level 1 students. It sort of comes with your dashboard. And ironically enough, if you want one thing that is going to improve your performance as a trader, if you really want to take on this job, and trust me, most people in this world cannot do this job. So if you really want to, and the cool part about it is you can build out your trade journal so that it speaks to, well, Brian, I'm an investor and my trading plan says that I have to actually only buy when I see weekly W's, which means I don't actually buy that much. And when I do buy, as soon as it doubles in price, I sell half of it, and then I get my original capital back, and I'm on to looking for another weekly W. That's perfectly fine. If that's what your journal looks like, then you're running your small business of position trading. There's nothing wrong with that. So I'll tell you this. So if anything, Chris started the video there. We've got, if you could put in our little notes, like the tags that I've been asking you to do recently. We got a theme song lead in that's like 10 seconds long. If you can make note of that. And then we've got probably like about a 2 or 3 minutes. Well, no, actually, that was about 10 minutes. Soliloquy there on the school program, learning the process, and and the significance of our trading journal tool that we have embedded on the dashboard here. What do you think, Chris? Can you make note of that? Because I have to build this over the next few weeks for Josh, and I'd like to sort of every opportunity I have do like a little 2 or 3 minute rant and then sort of piece it all together for him in a nice pretty package. What do you think? Does that sound good? Okay. Thanks, man. You're a scholar and a gentleman. So speaking of which, what are we seeing out of this wonderful dashboard that that TRI has built here? I think with regard to the weekly commodity trends survey, actually, the gentleman that I show you every once in a while, I give away his website password, which really isn't too smart. But a gentleman who's been helping me build this tool out over the past 6 months or so he's a brilliant coder. And then, of course, we passed on the instruction to Stuart. And I see, Stuart, you're over there on YouTube. So you and I need to chat a little bit about the function that you're using to actually create the scoring. I need to review with you. I think there's something that's not mechanically correct with the scoring. So anyway, Stuart, if you could look into your calendar, and actually I should say Stuart without a T. So Stuart, I think I got that right. Anyway, if you could look in your calendar and pencil me in for an hour or something, maybe Monday or Tuesday, I'd appreciate it. I could just review that. But on balance, I think it's doing its job. It's just could it be a little bit fine-tuned? Yeah, sure. And the cool part about it, of course, is that, and I wouldn't have done this on my old clunky 1930s website, but we are able to actually include the crypto universe in our weekly commodity trend survey. And I've kind of illustrated this to you. I remember doing it last cycle. And I would take like a trading view page and I'd have like a whole bunch of these all over the place, and you could see the actual moving average crosses and if they were bullish or bearish. And it's really not too difficult to build. But for the purposes of this conversation here and what we've done on the website is we've tried to algorithmize this. Just keep it as simple as possible. So at any given point in time, you should be able to pull up this kind of matrix. Now, typically venture capital, of course, is up and down like a horse drawers, right? Just all over the place. So it is relevant to see like some of these numbers are almost laughable, right? Here, algos, current price is 36 cents and the 50% level is like 5 times that level. What? That's crazy. Yeah. But that's venture capital. So, I did see somebody in the lounge point out, well, you know what? We should put out like how many doubles would it be to the 50% rule? Or, well, how many X's? That's a 10X move. Fucking A. That's not normal. Just understand that that's purely a function of the venture capital space. This is why people like trading venture capital, is because it's so insanely volatile. So I wanted to just make note of that, because I know that there was one person in the lounge who was posting out. I mean, that's a great idea, but that's not actually how we're supposed to use this. It's supposed to be for boring things like the commodity markets, like sugar prices, or like mind you, lumber's pretty. And the funny thing is actually we're in an environment where actually there is enough volatility in this space that actually you can start to see some pretty wild action in the commodity space. I don't know how relevant this is. In fact, actually, I think if this is I guess that's kind of misleading. GLD gold shares, like theoretically, these should be exchange traded funds. And the exchange traded funds should do nothing more than replicate the underlying commodity price. It's kind of it's a hack. It's a way to get around the problem. Ideally, what should happen, and actually I didn't do it yesterday because we have a pretty big fundamental event coming up in the market tomorrow. And and Tuesday, so I didn't really want to do a hell of a lot of work. Kind of took yesterday off, if you don't mind. But what should happen is the way the weekly commodity trend survey should work is, here, for instance, this would be Bitcoin. The question from the weekly commodity trend survey is it's always asking where is price relative to the mean. And the mean and there's a million different ways to measure the mean. It could be a moving average. It could be something like a fib ratio. Me personally, I'm kind of a fan of WD GAN. So the mean that I like to use is just the 50% rule over the last 52 weeks. So it is interesting how, here is October. And if we go back to last October, that's basically a peak up there, is the mean over the past year in the Bitcoin price is right there, $43,565. And that's the irony of it all, right? And as soon as I say that, people go, what? Right, the price is 21,000 and the mean is 43,000. Doesn't that sound like, well, maybe I could bang out a double and get myself some free coins? Probably, wouldn't surprise me. You can see the little trade that I have on right now, and that should be pretty obvious. And actually, this is one thing that I'm seriously considering changing with regard to the weekly commodity trend survey is, would it be more appropriate? And actually, this is a daily chart. Let's go to that weekly chart. So this is what the weekly commodity trend survey works off of. There is that 52-week mean. Is it maybe more appropriate to work off of the 200 SMA as the mean, like you saw on the daily chart? How that's where this trade in particular actually is going to look to take profits, as a tag of that 200 SMA. And what happens if it takes like a little while for price to move along here? And so we actually see that the mean slowly gets pulled down to the point where 200 SMAs and 50% rules actually end up aligning. So I wouldn't be surprised if we see something like that. So a couple conversations I'm sort of mushing together here. Sorry, folks. Kind of thinking this through as we talk. So, if we were going to look at it from the weekly commodity trend survey, we would say, gee whiz, this sure looks cheap relative to the mean. But you'll notice that we are still on a weekly basis, and this is the Bitcoin futures, we are still trending down, where the teal is below the red. This red, that's a fast moving average. You can see it likes to hug price really closely. The teal is a little bit slower moving average. It's an average price over the past 30 bars, and it's also simple. This red line's an exponential moving average, which means that it hugs price even really closely. So anyway, point here is that relationship right there is really telling to me with regard to trend. And you can clearly see when we cross bearishly here, wow, did we ever reverse? Ouch. Kaboom. I see a lot of this in the marketplace right now, where on a relative basis, relative to the mean, we are at an extreme. We're still trending down though. So for, we teach in the education program, there are a lot of sort of tells that would sort of tell us that maybe price is a little stronger than what price is showing us itself. That's this idea of divergence. So you can see how if I just draw a simple line off of, this is a little bit complicated for the noobs, but this is a measure. It's an indicator, MACD, moving average convergence and divergence. It's a measure of how moving averages are relating to each other. And this one in particular, it's a study of two moving averages and then a moving average of that study. Whoa, freak you out, man. It's kind of cool that we spend a good portion of our level 1 education program teaching people these kind of basic concepts to technical analysis. And more importantly, what I really like is, I mean, first and foremost, we teach it correctly. You'd be surprised how many people teach MACD and the interpretation of MACD completely wrong. Drives you crazy. But I think the good part about our education program, and the level oneers actually should be going through this shortly, is that we sort of explain the why. Why does this moving average relationship work the way that it does? So anyway, point here is, and through many years of working with the MACD, I've come to respect the histograms message. That to me is the more important message, and I think it really demonstrates this concept of divergence really, really well. So you can clearly see there's a big fat W working in this MACD histograms indicator, right? The study right there, big W. And yet price just is making lower lows constantly. So you can see higher lows, lower lows. That's what we call divergence. Something's not right here. So kind of a handy tell. It's this happens to be a futures contract that you can see I'm playing around with. I mean, of course, all you guys probably more interested in this kind of chart. This is the bit stamp exchange. And I suppose also too, it's interesting. I do a show on Wednesdays about crypto. That's that same, ironically enough, that's exactly the same trade, but this is the cash market. So this is the futures industry trade. And let's see, I think, yeah, there it is there. And actually, I also have it in another window, but see, there is that futures trade. Boom, 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 boom. Although, where is the prompt? There's a profit taking, so that should be up there. There it is. That's the daily chart. Yeah, so that's the same chart. Same study. I really like how there's this big honking gap right up top here on this futures chart. That alone says that there's very, very high probability. In fact, actually, this would be kind of a fun quiz. People are probably watching on the YouTube channel. So all you guys type in. I don't know whether when you watch the video afterward, do you actually see all this typing and stuff? I don't know whether you guys do or not. Anyway, what is the statistical probability that this gap right here gets filled in? And everybody watching it later on goes, oh, wow, look at that. And I mean, this is a pretty big number. Hey, Zonks got it. Way to go, Zonks. Oh, yeah, and hit that like button, please. Pretty pleased with sugar on it. There's 50, 60 people of you over there watching, and there's 18 likes. Let's see if we can get 50 likes. Come on, you guys. Give me some love here, baby. Stuart, what are you doing? You should be doing. Hey, there's Stoned Ape. Actually, Stoned Ape tried to help me understand the political situation right now. I know it's never an easy challenge. Actually, I don't think it's that page. That's our user manual. Where's that betting page? Oh, yeah. Okay. Well, before we finish that, we'll go over there. Let's just finish this thought. Zongs puts 90. Dimitri 91.4. Now there's a guy who's listened to our rants before. So that's an interesting number. Where would you come up with a number like 91.4? Anyway. There was a fun article that was passed around. Somebody did a study on gaps and they came up with 91.4, which is a fascinating number. Anyway, point of the matter is I like that trade setup. It just it's resonating well with me. So anyway, it's just working away, doing its thing. Really, it's a question of somebody asked, why trade the futures instead of actual Bitcoin? And that's really a function of what your business plan is. I happen to have an account at AMP, and I trade crude and ES and gold and stuff. And so really what I'm trying to do is just incorporate crypto into that business model. That is just yet another market. And I think I started off the conversation with I ran a weekly commodity trend survey from the commodity markets themselves years and years and years ago. And I've been doing videos on Rumble, although I'm sure that's going to piss the YouTube algorithm off. Hey, Eddie gave us a +1. Thank you, sir. I see about, oh, look at that. It looks like we lost some viewers. You ask somebody to like the video and all of a sudden the viewers drop by 10%. Like, what the hell? Anyway, so these kind of markets I'm in there ranting and babbling about daily. I mean, I think I've showed you guys this trade before. Hey, that was just perfect. And you know what I really should be touting is this dashboard, because it's the dashboard that told me the signal. I mean, this is what the futures traders see, right? This is a cup and handle. Remember I was talking to you about bullish momentum divergences? Look at the size of that damn divergence when I came in. And more importantly, down here, when you actually went on social media, my God, the sentiment was just insanely bearish. You would have thought that capitalism was coming to an end the way these guys were acting when the market was down here. So, of course, what's the market going to do? It's going to go the other bloody direction. Piss off. I mean, this is so cliche. It was ridiculous. And then probably what was even more cliche about it, which really drives you crazy, is that all the old timers, whenever you checked in, there's one guy that I like to follow, Larry Williams. I mean, the definition of old timers in the marketplace, he makes reference to Warren Buffett indicators. I mean, oh my goodness, that's old of old. And he was actually very, very bullish. Congratulations, Larry. And I think I am a fan of Larry. And then you couple Larry's message with the way that the darn breadth indicators were acting here. I'll tell you, folks, you ever take a screenshot of this, somebody, please, because this is right here. This is what you're here to learn. If you ever get an image that looks like this, where you have a big W in the teal, and then you have a cute little W in the red fast moving average right in the right-hand side of this big weekly teal, that is like the buy signal of buy signals. I mean, just stunning signal. On the Dow, there it was. You can see that teal put in the most beautiful W. Are we still going? Yeah, that's right, Nick. He's saying, "Oh yeah, I was hanging out with my good buddy Tom DeMark." It's like, what? Oh goodness. Hopefully one day I could be at least invited to that kind of frivolity, that kind of party. All right. What's Grim saying? Okay, finally finished with the level winners. They had lots of great questions for me. Oh, that's cool. Awesome. Can someone unpack this tweet for me? What is the grievance with FTX? All right. Kind of mid thought. I guess I kind of wasted a whole bunch of time there. 11:30. Well, I hope you enjoyed that rant. I wonder, Chris, if we could make reference to, I don't know how we can pick that apart, but that was a cool little rant about the breadth indicator. I mean, it just nailed that bottom. It's just so pretty. Yeah, well, it would be good. But it was just so perfect. I'm sure I've talked about this before. I even put tweets and stuff out about this. I couldn't believe it. So anyway, the point here is now you see how the breadth looks now. I mean, this Dow, I think, is working really, really well too for us. And so interestingly enough, we got sort of our first fail signal there up to October 26th, 27th kind of idea. Halloween, of course, was right around that. Halloween's always a weird date in the marketplace. Then what did the market go and do? You can see it started to flake out here, of course, all around the Fed and that Fed announcement. So on the screen here, you can see I've got two lines. The first one was the Fed event. Then the second one was this is the election coming up on Tuesday. I didn't want to really read too much into the market until we get on the other side of this election. Usually there's some really wild price action. And I've got a funny feeling that we're probably going to see something crazy in the gold market. I made reference to this before. I remember last cycle, I don't know, maybe I had it on a different one. Is it over here? Oh, Jesus. Look at that. That actually looks like a pretty solid floor there, right? So this is the December gold contract. Unfortunately, with the election, it could be just mayhem. It's interesting. Is that and then we went after the stops event? I don't know. But I had said before that probably looking at this spot contract, we'll see a little better. It's tough to see it on this futures contract. Yeah, okay, so you can see I have the lines denoted. Mr. Druckenmiller, I got a funny feeling he's going to be active election night. I could very easily see just an absolute insane face-up rally, like something like $200-300 an ounce move in the gold price overnight, just absolutely jaw-dropping. And that son of a bitch is going to be up there selling against those rally peaks. And conversely, I could also very easily see come election night, they put in a little bottom here and get the public all thinking, hey, you know what, let's go and buy gold ahead of the election. Well, that's always dangerous, buying ahead of a big fundamental event. And you get the gold price comes off like here $100-200 an ounce into that election night event. And I mean, maybe we go blowing through these lows and down into these levels. I don't know. And Mr. Druckenmiller's on the buy side down in there. I could so easily see this. I mean, it's just got him written all over it. In fact, probably just looking at this image now, I think you probably should take this order down. I got a funny feeling it might even be as wide as then. Let's even move this. We'll move this down to 88.6. So we'll even say somewhere down into this area. Anyway, I wouldn't, and this is more for fun than anything else. But I wouldn't be surprised if there's an 88.6 tag in our future. There's going to be some insane volatility through that election night event. And there we go. And 88.6 levels actually set up trades. So let's see what happens. Crystal ball time. So, I mean, interesting enough, I think in the gold market, along with all markets, we're kind of like middle of the road. I had actually even been thinking that there was a bearish setup. I mean, that's a big fat M, right? But what I'm worried about, like, I think that the big fat M here is confirmed. Like, if we dump down into these levels, then all right, fine, you buy them back looking for that return to the mean trade. And, that probably works out to a few $100 or 10, 20, 30% return, but it's not a new bull market. And then conversely, I could see just a massive rally right up against these highs, which is just nothing more than a counter trend rally, which always happens. And the trend is still down because, hey, the market's still smiling at us. And nothing really changes. It's just we're in no man's land right now. You could get a spike equal direction, no problem. In fact, probably the trade is, and you should be bugging like Zach and Joe Z and Ray, although I haven't heard much from Ray recently, but it'd be interesting. Has volatility come out of price enough here? Because things have quieted down quite a bit here in the gold market. Has volatility come out of the market enough that actually you might even have the justification for a spread trade? If you're thinking, $2,000 and it's like $600, and that's basically about $300-400 to the upside. could you spend like a total of maybe $200-300 on buying a put and a call? And whichever way we break, there's enough volatility injected into the market that you just cover the other side of whatever you can get salvage value once the election event is over and the move is happening to actually justify the trade. Maybe. Anyway, so I'm going to call this my Druckenmiller trade. We'll leave it on here. Let's see what happens through the election, if I'm even remotely accurate. But the long and short of it here is this is suggesting that there is a hell of a lot of volatility that could come into the market here shortly. Don't kid yourself, folks. I got a funny feeling we're building up to some pretty wild price action into the end of the year. All right. So funny tangent we went off there. So point here is stock market flashing danger signs. Interesting how fast has now gotten out of that overbought condition. We did have a little bit of a condition there the other day. You notice that we actually had a situation where the country funds actually all went uber bullish there. So a little bit dangerous. We didn't get the actual S&P itself to go uber sort of danger. But we did have the world equity markets kind of, you know what? You're maybe getting a little ahead of yourselves. So market did break there. If we look at the breadth indicator, oh, Jesus Christ, look at that. Now the country funds are completely overbought again. Is that not a dangerous situation? That to me looks troublesome. So we had a bit of a reprieve. They sort of calmed things down there. And then I guess on Friday's big market rally there, they've gone and taken things up back to stupidly overbought again, which is dangerous. Obviously the U.S. election is going to carry a lot of implications. I think it's, it was interestingly, I was commenting with the group as we were sort of watching things unfold there the other day, that the breadth indicator is flashing some major warning signs. And then we had, at one point on Friday, this was actually a shooting star, but actually into the close of the session, they brought the market back smartly. It was really interesting because it was an options expiry, and there was wasn't so much the S&P, but Apple itself was just sitting right on its knees and just weaker than weak. I mean, you can even see how there was a really, really important clothesline level here. So you had that clothesline there. That was 138.20. 138.34, 138.38. Holy moly, is that an important clothesline level? So we had 138.88. So we were testing that. 138.38. That's exactly these levels. And notice that through the day, and that's going to start showing up on weekly charts as a very important level. 138.20, I said that earlier, 138.38, here we are, 138.38. I mean, it's just teetering. And what was really interesting is right into the close, we were way down below, right? We were sitting 134, like $4 lower. And then all of a sudden, right? And this is at 11 a.m. on Friday, right? All the options and stuff are all expiring. And then especially like the weekly options, I think they expire at 11 o'clock. I can't remember. They might. I think it's just the monthly ones that expire on the Saturday. And this was just a weekly options expiry. But we did notice that like on the S&Ps and stuff like that, there were some pretty big strikes down below. And then we sort of figured, but there was some interesting calls up above. So we didn't think that the market was really going to move that hard. But just sort of coming into that final hour of trading, you can see they just get your frickin' rally caps on, boys. We got to bring this son of a bum back. and they did into that weekly close. It was just like a, come on, baby, come on. Come on, baby, come on, right? And that 138.20, right? That was the line in the sand. If they closed below that, all hell was going to break loose. And that was like right there. So they had to somehow get it back, and look how they just got squeaked it back above that level into the close. So is that's yeah, I mean that's not a bad looking little W there. You know, if you were a sharp trader, look at the bull divs. So you could make Willie did go stupid over here. You could make the argument that if you were a sharp trader, there was a trade to be had there, and that was the whole stock market basically coming into the end of the session there. Somebody really wanted to bring this market back. They did not want it to break down. I have a feeling that a big part of that has to do with the election. I mean, that's a huge fundamental unknown that you just don't know how this is going to play out. And what was really interesting, I mean, this is the S&P 500, so you can see how they brought him back above. I think we were talking in the lounge that the 365s was actually the really big number that they really wanted to get the market above. I think there was also quite a bit of puts in the 370s as well, though. So anyway, all those puts expired worthless. Like I said, Apple puts, people being short Apple, they all got caught. And vroom, vroom, they ramped it the other direction. Interesting how, and I commented late last week that this really surprised me that we were thinking market bottoms there, and then everything just sort of started to evaporate. And we actually got a pretty nasty technical failure here through this M through here. So tech stocks are not out of the woods by a long shot. That Apple is just clinging on by a thread. And of course, if you're reading any of the news coming out of Asia right now, it's completely understandable. I mean, China is an absolute fucking basket case. Swore, so of course, YouTube's not going to like that. Telling the truth about communist totalitarian dictatorships and how you should avoid those countries like the plague. We constantly on the site, it's really funny. Let's see. I do a study. This is that Rumble stock. Holy crap, up and down like a horse drawers. I had told people that it broke down before, and really the story I thought was in major technical trouble. So if you did buy it, then maybe you're getting a reprieve and you can hop off here. I bought 100 shares for my RSP, so it's not like a hell of a lot of money. It was like $1,300, like about $1,200 or something Canadian. So I'm just gonna let it work. I haven't touched the position, but traders, I do remember saying that when it broke through there, ugh, that looks horrible. And as I said there before, I mean, total off tangent, sorry, but this just happened to be on the screen, so I thought I'd mention it. Big old smiley face, so I'm not overly impressed with that Rumble chart anymore. But in reference to China, we had kind of made a funny joke over the years. Are we getting Chinaed? And did we just get Chinaed again, these bastards? That is a Canadian government bonds, though. That's a different China altogether. It was the venture market that we did this off of, which was funny. I think this was it. No, it's not this chart. That's too bad. Over here, maybe. Anyway, I had fun tweets. Just a real quick study. June 2008, June, July, there was the Summer Olympics for China. And how did we do following that event? And then we just had the Winter Olympics for China. And how ironic, eh? Just finished there. And how have we done since then? China, 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 don't get China. Well, poor old Canadian venture cap guys. And keep in mind that, the venture cap, it's interesting. I have been hearing a lot of people talking about how venture cap's actually looking pretty appealing. And I guess from a momentum perspective, you can kind of see why. Willie's pretty stupidly oversold there. Actually, this would be a good commodity trend survey. Is this trending up? No. You can see where interesting out there's where the trends pointed down. There's your Winter Olympics, and whoo, boy, what a mess. And of course, Vladdy did all his wonderfulness, all that crap. No real signs of divergence. In fact, probably Bitcoin chart looks better than this thing right now. So anyway, man, I'm like 20 different directions here. What should we? I was talking to you guys about the dashboard. and data there. I guess, what time is it? 11:45. We should probably get on to questions. I don't know whether I think I have a feeling I just dropped off in the middle of a statement there. Sorry, guys. Kind of got distracted. Too many. Whenever I pull up China charts, I always get distracted. Then I was talking about that little rumble. Okay, blah, 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 blah. Wow, I sure went off on a tangent there. Gonna try and get back on task here. So, oh yeah, and before I get going, and that was the whole point of this, Tuesday we got a huge fundamental event coming up here. You could watch, interesting how the US dollar index here is kind of waffling a bit. It's interesting how the Fed basically said that hasn't been any change in their policy. I think this has everything to do with who's going to be driving the bus out of Washington this coming at least the next 2 years. You can think of it this way, and it's so ironic, right? Politically, a strong US dollar technically is deflationary. And we've actually gone through one hell of a strong US dollar move. As the Fed is, seeing this ridiculous injection of massive, insane price inflation. And then they've been scrambling over the past year or so to break the economy. And one thing I will say was I watched this video and I even put a tweet out about it, but I watched this video here. I thought, aside from this gentleman, why the hell are you working with Trex? But anyway, that's a comment unto itself. But I did watch this video with this lady here, Quill Intelligence, and her name, Daniele Di Martino Booth. Gotta say, man, she's sharp as a whip. And I think she knows her shit. And she spent basically it was a full hour video. She basically spent the whole hour saying there is a lot of anecdotal evidence that the credit market in the States is about to tip over. So the Fed is getting what it wants. You don't go and raise interest rates from nothing to 4 or 5% without it having a material impact on the economy. So this stronger US dollar, ironically enough, it's actually the hallmark of the leftist governments. So when Bill Clinton was in power, I remember Paul Rubin, he was the then Secretary of Treasury down in the States, of course, another sort of Goldman Sachs stooge. But we're in favor of a strong US dollar policy, low inflation. And really, I mean, it wasn't necessarily that the policies that they were putting in place were having that effect. It's, I think it was actually more just sort of fate, because it happened to be right into that greed cycle peak and everybody and their brother was buying US tech stocks. But anyway, the point I'm trying to make here is that a strong US dollar index is actually the hallmark of a left-leaning government. And typically Democrats down in the States love a strong US dollar because theoretically it's disinflationary. We're not allowed to use the word deflationary. In fact, the banksters won't even allow the assets to deflate, which is scary. But point here is strong US dollar should be deflationary or disinflationary, which is a hallmark of the Democrats. And ironically enough, if this election comes along and the Republicans basically take control of Washington, I've always said that the president of the United States is actually a minor character. The executive office, theoretically, of the three branches of the US government, the executive office is actually the least powerful. Yes, they're supposed to basically run the face of the US government, Treasury Department, Defense Department, right? All that kind of stuff. But ironically enough, they actually have the least power, right? And if you wanted to get Washington to do something, ironically enough, the US president is actually what they call it. His powers, they call it the power of the bully pulpit, where he's supposed to stand up there and say, hey, I represent the people's voice. Congress, do this. Congress, do that. And, Supreme Court, come on. What's your problem, man? Do this. change the law for that, whatever. Anyway, point here is if the Congress flips over violently to the Republicans, that's going to actually, ironically enough, be US dollar bearish in a weird sort of way, because the right wing actually would prefer to have higher commodity prices. I mean, just think of it this way. How many people in the oil business in the United States support the Republican Party versus the Democrat Party? I mean, you guys all know the answer to that. So, and this is the odd thing about our world right now, is you might have like a right-leaning political U.S. Congress that supports things like oil drilling, and they'll call it oil independence and all that kind of fun stuff, which will ironically, inevitably, at the end of all this, actually lead to lower oil prices. Makes your head spin. Anyway, with regard to the politics, and this is just over the short term, you can kind of see the US dollar index has these nasty bearish divergence. Remember, we looked at the weekly Bitcoin chart. It has that bullish divergence. What a surprise. Sort of the anti-Bitcoin, the US dollar's got a bearish divergence working. You can see the M's up here in RSI. This is looking pretty toppy anyway. Willie's nice and stupidly overbought. And you can see where the 200-week SMA is. That's pretty far down. And interestingly enough, I think you can actually make the argument that, this was a little bear ABCD that was forming here on the lower time frame charts. But on a weekly basis, I think you can actually start to even see M's starting to come in here, especially if hasn't quite solidified there. So if anything, I probably would expect some sort of rally up top to sort of make that big happy face if this actually is a top in the US dollar. But it is interesting how on the candle body, wicks and tails, that is actually an M in place there on the US dollar index. But I guess the message that I would take away from here is we are set up for that political event. The top has been put in, the top fired. So probably a lot of professional traders are kind of like, okay, if I am uber long, I better take some profits and just cool my jets. And any kind of structural signals here probably going to dictate the trade. And then, if we think about things like first stop targets and good old Ray Burchett, where should that come in? We got Colin and his pump chaser zone. That's the same concept. 38.2 is at 104, basically 105. And it would be nothing more than a check of that previous low and a check of that high. Probably you could even draw a trend line off of these two levels there to there, and there's your sort of support window. So does that sort of align with other thinking? We've got, if we're looking at the futures markets, we've got these big ass bullish setups working on the US stock market. That would sort of correspond with that if we saw a pullback there. Maybe we get that big honking counter trend rally out of the gold market, which, if you saw that, steep drop in the US dollar index, that's probably going to get the gold bugs attention, wherever the hell that damn gold chart is. There we are up there. I suppose you could argue that, gee whiz, that does not look very W-ish, Brian. I don't know whether I would this would be a tough quote unquote trade to take. I think you are getting bullish divs. This would be the kind of thing, if you wanted to play it, I think what would be really smart is tomorrow, somebody go and price what a 1 week, maybe even like a $1,900 call. If we do this broiler chicken show next week, let's even put somebody go and find out for me, what would a one like well, what the hell? I suppose I can do it here. Lazy bastard. Just do it yourself, damn it. So head on over to the stock market and let's go see, just for fun, if you wanted to play the long side, this is the gold ETF. And of course, they have weekly options here. So we see that the price is, we'll go with the 11. Well, yeah, we'll go with this weekly. My hunch is the price spikes through this event, but by time Friday comes along, the whole thing will be over. So you better act quick on your toes if you are going to do this trade. 6 days till expiry. Market's what's that? Is that 1,500? Is that right? 1,500. How the hell does that work? $1,564.70. Is that how that works? It's been a long time since I traded gold. And 1676 is the futures price. That seems a bit odd. I wonder why there's such a discrepancy there. Anyway, let's maybe take a look for fun. Let's go see what this GLD looks like. It's surprising how it's so weak. Oh, look at that gap. Holy moly. Well, I bet a volatility came into the options prices there, right? In fact, you know what kills me is I was watching our buddy Snonoff. I don't know whether he's, you know, ironically enough on social media. And these guys, they're American, so they really sell the sex. I mean, it's stunning how they sell the sex on this stuff. But I have to say, I like listening to Snonoff. I think he's got a half decent head on his shoulders. This guy here, yeah, he's a character. He's probably a lot like the Beamish, right? Real odd looking weirdo. I'm sure he's going, speak for yourself, buddy. But what I was interested in was I was listening to him on Thursday, and he was like, "Man, I am so long. I'm long everything that's anti-US dollar." And of course, what I just talked about with the US dollar index, especially if you go down to like the 4-hour chart. I think I had it on the screen here. Hold on a second. Let's see if I can show you. Yeah. So hopefully, yeah, here it is. So we had this interesting, you know, A, B, C, D, huge M, market smiling at you, blah, 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 all that. And then look at this cool little top that came in right on this trend line and then just rolled right over. And I was listening to him and he was going, "Man, I'm just long everything. I'm long China. I'm long Canadian dollars. I'm long British pounds. I'm long euro. I'm long everything versus the US dollar." And he just fucking nailed that trade. Congratulations, sir. Man, that was a good trade. So, and I like actually referring our level 3ers who are learning options. I actually like referring them to Sosnoff. He's a pretty smart cookie. Anyway, so I guess the way I'm looking at this is, and I'm sort of rambling here, is, oh yeah, that's right. We were going to look at a gold trade here. So on this one, I think it would be something like the 175 call just for the week. Let's just see, just for fun, what the hell happens here. So we'll go, we'll price the 1 week gold 175 even. That's a big fat round. Whoops. Oh, okay, I can't do it off of here. This will be fun. You know, if you have a stock options account, you know, maybe it's $100, $200 trade. Might be worth taking a shot at just to see what the hell happens. So we'll put this to 175 even. Now let's see how much this is going to cost us. So the 175 is right off the board. 175s. Whoops, that can't be right. What am I looking at here? Calls? There's 6 days to go. Geez, you could buy them for nothing. That's kind of cool. I've been just interesting just to see what the hell happens. Is that real midpoint? Jesus. So we could sneak in and get like a 169 for a penny, and they're actually offered at a penny. Look at that. Somebody bought 64 of them. Should see what the chart looks like here. November 169s. There you go. I mean, there's like we're gonna go to the track, the dog track, and we're gonna place a bet. And if this thing just gets back to a nickel, it's an absolute home run. So let's go. I'll even go like, oh, can't do it any lower than that. Probably have to pay for the subscription. All right, so this is the November 169 call with the market sitting at 156. So you'd have to see an absolute explosion in price for this thing to pay off. But if price does explode, you might just be sitting on a massive home run. And we got even better than 175. We got in 169. So that's if all the market does is just goes back and kisses that 50% level, this thing turns out to be worth what, $1.50. Holy crap. And it's trading at a penny right now. There you go. So there's your trade. Let's see what the hell happens. It probably, like I said, this is the kind of trade that if I was a broker, right? I had like some of my older men say, what the hell? Let's take a shot into the end of the week. Let's go buy 100 of them. Right? Probably cost you like $100 in premium. And then it'll cost you $100 in commission just to do the trade. So it's going to cost you $200. But what the hell? It might turn into $5,000. So he said the 169 calls at a penny. And you know what? We'll be generous. We'll pay 2 cents. And we'll say we'll buy 50 of them. That's a big $100. Well, let's see what happens. You know what? We'll even what the hell? We'll be generous. Discount brokerage house. Let's go. Total cost be $125. So $25 in commission. Oh my God, that's outrageous. Well, let's see. Into the end of the week, you never know what the hell happened. So anyway, Brian's wasting time here, but there's kind of a fun image for you to consider. We'll see if where we add to watch list just for fun, shits and giggles. All right, and we'll even put a little note on there that we paper trade strap that on. Well, it's not even. I don't even know. I don't think it would be cool on TradingView's paper trading platform if you could paper trade options. That would be kind of sick. Okay, I've been wasting, about an hour and a half here now. Sorry, everyone. Let's pop on over to your questions. We'll spend the next hour going through this, and then I'll head off and see if I can give Liam an awesome afternoon. Okay, so today is the 6th of November. Hopefully I think I answered all these. Oh yeah, we talked about IMIN. I don't know. I kind of like that name as a proxy on crypto, but it doesn't really meet the VCIM criteria anymore. But I think we talked that into the ground. Okay, so number one, you have to give props to Mr. Druckenmiller. Yeah, he's really good traders that, ironically enough, the absolute best poker players are the guys that win $1 million. And they just stand up from the table and they go, yeah, I won $1 million. Yeah, I guess I won $1 million, I guess. And that's the way that I see Stanley. I mean, he's not going to win handsomest guy of the year award. He's not going to win Mr. Congeniality. He's actually kind of boring. But you got to love him. Killer trader. I am sure you know his story about shorting the pound. Stan's not the best risk manager. I'll tell you that much. The one thing I don't like about Stanley is when he goes up for an idea, he goes ridiculously overboard. So, remember, Brian's a chicken shit, and half of the reason why Stanley is as rich and famous as he is because he has the what is it called? The something of his convictions. How does that go? The something of his convictions. Anyway, that's the one thing I don't have. Is I am chicken shit by nature. Life has burnt me. The market has burnt me. So I'm one of these slow and steady wins the race. 95% of people lose money in this game. I'm always going to insist that you sell half of the position as soon as it doubles in price, because that's the chicken shit. That's the risk manager that's speaking to you. Whereas, there are some people in the crypto space that while we're in a crypto bull, they go, don't sell half when it doubles, buy more, right? And so that would be like Stanley. He'd be like, buy more, man. And then also too, what kind of audience are you speaking to? Would Stanley say those kind of statements to a novice investor? Probably not. In fact, I've often heard him say, look, I'm a crazy ass trader, but that's who I am. And I have the something of my convictions. How the fuck does that saying go? Anyway. So what do you think about Soros' advice to increase size to 200% short, as he was already 100% short or whatever size, but I am sure it was not 5%. So my answer to you is, go hard or go home. I don't like that. And especially for you new people to trading, I think that's just a potion for disaster. And a really good example of that is the Three Arrows Capital. I think that's the name of them. Did I get that name right? That basically was that, hey, if it doubles, buy more, right? Kind of thing. But not thinking about, and keep in mind also too, these guys, they're dealing in huge macro bets. That's like apples and oranges compared to, like, say, something like venture capital and crypto. I don't even think Stanley even likes venture capital. He would prefer to do macro bets, but I can't comment specifically about that. Was that just a bet with everything at stake because he had that high level of conviction, or just a survivorship bias? I am going to say that you should never risk capital that you can't afford to lose. So I don't mind the idea of you going and making a bunch of money in the marketplace and then placing a really big bet on some sort of outlandish idea with the profits that you made from the marketplace. I don't mind that. There is a high probability that you might be wrong. I don't even understand that bet might just go belly up, and kind of like our gold bet here. I mean, if you were really serious about this, would you be going and buying a 1 week option? No fucking way. But, if you're going to go to Vegas and, roll them bones kind of idea. Well, that's, considering we have a big fundamental event coming up, that's fun. But I wouldn't go and bet the farm on something like this. That's just stupidity. Versus something when Stanley, goes and sort of really bets the farm. Ironically enough, he might actually have been sort of the trigger, and especially with Soros telling him, up the bet, and then people getting sort of word, hey, did you hear the quantum fund? Wasn't that the name of their fund? They're doubling down on their short bet. Oh boy, here we go. I'd probably also say too. Well, yeah. What I would say is, this is not good advice for new people to investing. Yeah, the odds of you being able to pull off a trade like Stanley or George are very, very low. I would say that once you get to a certain stage in your education, and your sort of, self-confidence in the marketplace, you'll know when you're ready to take one of these kind of bets. You'll know. But just understand that there are at least 1,000 stories of somebody taking a bet like these guys and it failing, versus the number of stories of these kind of guys taking these kind of bets and succeeding. So are you setting yourself up for failure going down this road? I actually think, yeah, I would say 99.9% of the people in this community, absolutely. Um, the one good part about pulling off a strategy like this in venture capital is that because we know this is a 4-year cycle, actually it's not that difficult to pull off these courage of your convictions. Thank you. Appreciate it. Crypto mainly. That, you know, they're because of the nature of this venture capital market, you can place, you know, these kind of home run bets. And, you know, actually I've seen guys do this in crypto now 2 or 3 cycles. I mean, hell, you saw Sjord basically took nothing and turned it into quite a bit of money. And then of course Mr. Kwan and his ego went and blew himself up, and it's gone. So there is that element. I mean, if Mr. Kwan's ego had remained in check and he didn't go and piss off a whole bunch of people around the world and set himself up for disaster, Sjord would be like, he would be, you know, gold-plated steaks kind of guy. But oh well. Live by the sword, die by the sword. If anything, it's a good reason why I don't like to just place all your cookies and all your bets on one idea. It can be dangerous. You know, and maybe that's part of my heritage. I don't know. You know, I remember, and it's funny how we actually have come completely full circle. Because I remember sitting at the dining room table, and my mother was a single mother. My father sort of said, "Fuck you," and walked out on her and her 3 kids. Just kind of a dickhead thing to do. And I remember watching her just bawling her eyes out because they rose the price of bus tickets from 25 cents to 35 cents. And she couldn't figure out how the hell she was going to be able to make the budget work. That was back in the late 70s. And it's so ironic that here we are, basically exactly the same place. 40 years later. It's kind of tragic, really. Anyway, so by definition, I'm a chicken shit, right? And, you know, if anything, I want girls18.online to solve all my problems because, hey, yeah, I'm going to find your love in U-City. I don't even have to have proper English grammar. I mean, this is how you can tell it's some sort of Chinese bot. They can't even pronounce. They can't even use proper English. It's so funny. And yet, whoever's running that bot has probably made like 5 times as much income as I have this month. So, you know, if anything, what you need to do is figure out girls 18 online. Obviously, they know the secret formula to life. Don't even have to speak proper English, and figure out some way that you can tap into human emotions. And, you know, appealing to the male sexual side of the species is a great way to tap into that emotional bullshit crap. And look at him. He's sitting here. He probably made more money than I've made here in this broadcast, just doing stupid crap, garbage shilling bot idiots, can't even string a sentence together, would never get invited to a Mensa meeting, but kind of like the Doge, la 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 la. You know, this is the screwy world that we live in. Makes no sense at all. Anyway, that kind of, I just looked over at the YouTube page and I see that. Like, what a crock of shit, eh? God, it just never ends. Anyway, so, you know, remember I used to have the designation FCSI. I was a fellow of the Canadian Securities Institute, which was the highest ethics designation a financial advisor in Canada can achieve, right? And so anybody who wanted to, you know, if you want to be a financial planner or something, the number one thing is, are you going to steal my money? So you got to, you know, it's like the South Park, and it's gone. I mean, there's so many easy ways to fail at this game. It's stunning how many ways there are to lose at this game. So yes, you can go down this road. And I would actually argue, if you got a little bit of gambling money, I mean, what the hell? You might take like a couple $100 and then all of a sudden gold prices take off because I don't know, maybe the damn socialists win and it's an absolute rout. Mind you, I think it would be the other way around. Maybe the Republicans win and it's an absolute rout. And the gold price jumps like $500 and boom, all of a sudden you just made a killing. I don't mind that, like consider it like a lottery ticket, but don't gamble with money that you can't afford to lose. So if you're going to take this kind of bet, and if, like George Soros, Stanley, and, if you hear that, hey, these guys, not only are they short, but they're doubling down, they're tripling down. Okay, well, take a little bit of your portfolio, go and buy some puts or some calls. And if the lottery ticket pays off, fucking A. Or if you like made a whole bunch of money and you're like, you know what, I'm going to shoot for the fences here. All right. But I wouldn't get into a habit of it. And I certainly wouldn't build your business plan around this. It's kind of like the baseball analogy. Are you going to build yourself that every single time you walk up to the plate, you're a home run hitter? How many guys, remember Bo Jackson? Everybody used to love Bo Jackson as a home run hitter, but what ended up killing him in the league was he kept striking out. And I remember Michael Jordan, he wanted to be a baseball player. No way he was going to hit home runs like those guys, like the big boys, but he just kept striking out. He couldn't catch a curveball. And trust me, these Soroses and Druckenmillers, they will be pitching the curveballs at you. Like the bet that George Stanley took that I was so enamored with a few years ago in the gold market was basically the exact counter intuitive trade. On election night, gold prices jumped up like $100, $200 an ounce, and he sold into that strength. So that's hard to do, folks. I'm not going to say that's easy at all. So anyway, I hope that gave you some food for thought, Branko. Let me know whether I've enlightened you at all. Okay, number 2, what is your altcoin risk management strategy? If cash is the safe option as part of risk management, do you trade crypto against stablecoins and then buy dips in Bitcoin, or do you trade alts against Bitcoin? The latter being in danger of a BTC price suddenly dropping. Yeah, absolutely. Without a shadow of a doubt, no ifs, ands, or buts. If you are here to quote unquote make money from trading, your business plan is to increase your net worth, then you always trade against whatever the fiat benchmark currency is. 100 years ago, 200 years ago, would have been the British pound. 200 years ago, you would say, well, I'm going to use the US dollar as my benchmark. They would have laughed at you. What are you, crazy? So, that changes with the times. As it is right now, it is the US dollar index under this sort of US Fed, AKA bankster class, Rothschild sort of hegemony system that they have up and running. And at the end of the day, if you are here to quote unquote make money from trading, if you're a day trader, then everything has to go right back to cash. And you finish the day, that's your cash balance. Are you up? Are you down? Margin call. Are you rich? Are you poor? I would say that if you're going to play the I trade alts versus Bitcoin, then really what you're doing is you're trying to quote unquote stack sats. It's a double-edged sword because Bitcoin is part of this ecosystem. I would say that during Bitcoin bull markets, and of course we all know the 4 or 5 year cycles, we all know that we are in a Bitcoin bear cycle right now. So if you are playing the stacking sats game, then you're in real dollar value. You're probably actually going to be seeing your net worth and your cash fiat equivalent balance going down, even though you are quote unquote stacking sats and you're collecting more and more and more Bitcoins or Ethereums or whatever it is that you're using as sort of your base value proxy. Some like the idea of just sort of keeping all of their assets within the crypto universe. there is a debate, from one government to another, whether you putting money inside the cryptoverse and then shifting it from one coin to another, what the capital gains implications are, and how that operates. I'm not going to say that's easy to figure out at all. What I would, and of course, we don't give, tax advice, not even the slightest bit interested in opening up that Pandora's box. Grim will even tell you in the level 1, get yourself CPA, CFA, probably CPA. CFA is Chartered Financial Analyst, so that's not going to help. But CPA is Chartered Professional Accountant. There's also a couple other accountant designations that'll work to help with tax advice. We're not here to give tax advice. So really, it's just really a question of, are you here to quote unquote make money from trading and actually see your cash balance go up? Or are you here to stack sats? I can't answer what one right or another. You talk to some people in the cryptoverse and cash is worthless in the long run, right? And Bitcoin's going to go to $1 million. So if you stacked up a gazillion, bazillion Bitcoins, well, are you going to be happy at the end of it? Sure. In the intermediate term, could you see the value of your portfolio zoom all over the place? And you still technically might have to pay capital gains on realized profits on exchanging a shitcoin for Bitcoins and back and forth. That's definitely possible. Might as well just state the reality. I wouldn't necessarily state whether one is better or the other. Hey, they're back. Look at that. So let's see if they actually can get their grammar correctly. So now 69 girls XYZ. Woohoo, man, that's fucking hot. 69 girl. I'm literally getting a hard on just saying that person's username.
Hogue actually got upset about this like a week or so ago. He was starting to get Hogue, John Hoagland over at Top Step. He was starting to get this during the forecast.
Oh, they were going on Top Step.
Yeah. He wasn't happy about that. He was very upset about that.
Would just go.
So consider yourself lucky. You've made it to the club. Yeah.
See, now there's no way in hell you're ever gonna hear John Hoagland say, "Well, I just got a hard on over that." That's great. That's hilarious. It never ends, eh? And this is the downside to all this tech, is that literally it spawns all this kind of. If anything, I think the internet actually encourages bad behavior by humans. I hate to say it, but oh well. Okay, so what is your altcoin risk management strategy? First and foremost, I want to do everything relative to US dollar. And even my strategy, stating it to the boys, actually, I'm starting to build a number of positions in crypto here, which surprised me a little bit, but all of these are all versus USDT. Live by the sword, die by the sword. I've got about 5 names that I'm interested in. I think these will be the names that I'll look to play going forward, all relative to USDT, all just trading setups. As soon as profit targets are hit, then boom, out it goes. We'll move certain portions of the trade over to, say, a third-party stablecoin like a USDB or USDC or something like that, to put that aside to pay for capital gains taxes. And then if I can sell, it'll, and actually, interesting enough, it's probably sell half on a 2.618. Where if I sell half, not on a double, but on a 2.618, then it'll be enough for the tax man to keep them happy. And then I'll take the original capital and go buy something else. And I'll take the free coins, put them on a ledger and just forget about them. So that's sort of my strategy going forward now, not versus Bitcoin. So that's my direct answer to that. And it will be going forward. Okay, your OK coin trading plan says you will not trade into a kill zone. What is a kill zone? This level 1 student wants to avoid killed in the market. Well, you will learn about that in liquidity events. That is week 11. I guess that's our final module in the level 1 course program. Probably more important for the day traders, lower time frame traders, these kind of people, especially if I'm trading things like crude oil. If you ever see me on the site, and I haven't been doing a lot of day trading since I got back from Portugal, because my day trading, I don't know, and it happens, but I lost sort of my mojo while on the Portuguese trip, so I haven't really been taking any day trade setups of late. Kind of dialed everything down just to get nice and crisp again. But here, for example, this is a half-hour chart for crude. You can see cute little bot setups coming in to take us up top. So down in here, hopefully you can see we had sort of A to B. Actually, this looks like it's a little bit off. So A to B, there to there. Just bear with me here a second. You've probably seen me do these bots before. This is a pretty typical kind of trade that I'd want to take. So, all right, so here was the a trend continuation pattern. I had this sort of upside objective up in the 90s. I even talked about it at the beginning of last week. It's just a question of just trying to hunt setups to take you up on the lower time frame charts to take you up top. So this is a setup that sort of came in on Friday. Well, what date is this? This is November 3rd. Yeah, November 3rd. Yeah, so that's Thursday. Friday is here, November 4th. So Thursday through the day that came in. I'm not going to say this is an easy trade to take. Don't get me wrong. Looks to me like something along those lines. Then notice, look at the time that this happens. So this is actually what's called the Asian kill zone. And what you see here is, looks like a double bottom there. And then notice, this is a reload zone. I don't know, it's so easy to see this shit in hindsight. It drives you crazy. So this is the end of the North American session on Thursday, and this is the beginning of the Asian session for Friday. The times are still quoted in sort of North America, but for my purposes, there's 1 o'clock, 1:30, 2 o'clock, then boom, end of the trading day, 3 o'clock. So this is what we call the dead zone. And then notice here, this is 1742 or basically 540. So this is what we call the Asian kill zone, or this is basically where the Asian stock market opened up for the next day. And I might argue that coming out of the Asian kill zone, so that's now 6 o'clock, 6 p.m., there is your sort of Asian session meat and potatoes. And this is the end of the Asian session. So I might say that probably not a good idea to take a trade heading into that event. And you notice, look at this low right here. That low, 87.83. Look at that low, 87.87. That low, 87.88. What do you think just happened there? Hopefully you all say, well, it looks to me like through the kill zone, they made the market look like it was going to bottom. Keep in mind, this one candle at one point was a big green candle. It was sitting right up top there. And then it backed off and it came all the way and finished here. Then we opened up this candle and went beep and then went straight down and ran these stops. Ding, 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 ding. And then the market took off like a rocket heading straight up. So Here is a very good example that this is the Asian kill zone. And had you come in here and bought and heading into the kill zone, and then even, if we go down to like, say, let's go like a 3-minute chart, really zoom in. I'm a day trader. Look at me. I like to day trade. Look at what these jerks did. So, here's coming into the kill zone. You're like, well, that Beamish guy says W's are the shit. So down, up, down, W, right on. Let's buy that thing. Boom. And what did they do? They spent the next couple hours just screwing with your head. Oh, yeah, I'm good. Oh, I'm not doing so good. Oh, boy, this looks bad. Okay, look at the bottom coming in here. And this is probably where a lot of noobs went, okay, there's the test of that low. They filled in the gap. Looks like a nice double bottoms coming in here. Let's go and buy. Right, I'm going to buy that level right there. Nice W, risk against the lows. So they take it up a bit. Oh, look how smart I am. And then bam, ding, 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 ding. Run all the stops. All the weak hands are flushed out. And then coming out the other side of the kill zone, hey, hell, if you had just bought this first W right there, right, coming out the other side of the kill zone, and he kind of buys in here, and look at what happened. Rum, straight up. So there is a perfect example of a kill zone FU. Really good example. And these jerks, they do it all the time. I mean, all the bloody time. You could even, and this would be smart, I think, you could actually even build a setup that says identify the kill zone. We're coming into the kill zone, try and figure out some sort of bottom pattern that they're trying to goad people into buying, and then place your buy order right where you think all their stop loss orders would be. And this is Johnny Hoagland. We were talking, and Chris there was talking about Mr. Hoagland. He doesn't like the X69 girl. 69, woohoo! Actually, honestly, my favorite number is not 69, it's 70. 69, and then you owe me one. Anyway. So, but there's a really good example where you could build a trading plan right around an FU event in a kill zone. And keep in mind too, there's probably a lot of people that were looking at this M as it was happening and said, oh yeah, all those punks that wanted to get long, we're going to short them into the ground. And they went short there on that M. And the market just whipshot around and blasted them out too. So you can see this kill zone, they did a lot of killing. And like I said, you'll learn about this in the, in fact, actually, that would be a really good tutorial piece, Chris, if you could put a tag on the time in the video. And actually, we even did that for the question here. That I think is actually a really good working example. What does a kill zone look like? And can you count how many people got killed in this kill zone? It's really good learning material. I'm just going to put a good example of Asian kill zone and all count how many kills they killed. There's a lot of them in there. And like I said, about Hogue, and actually John's been, or Chris here has been working with Hogue for long enough. Hopefully you kind of see how, like this used to be one of Hogue's favorites. In fact, this was one of Nebraska's favorite setups, where he would like literally place his order to buy right one tick below that key horizontal support and resistance level. And then he would place his sell order one tick above that order right there. So kind of like what you're saying, Michael, could you play that as a trading range? Sure. I mean, it's just really a question of how, you know what it is? It's really this simple, Michael. Can you identify edge? What is edge, right? How is there something that I can find in the marketplace that when it happens, the odds of my desired outcome happening are greater than the undesired outcome. If that makes any more sense. That's what edge is. So could edge be that I come in here and I buy breaks of previous lows because I know that a lot of the times the break is actually the liquidity event that they're looking for, and then the counter trend rally is my bread and butter? Okay. I would suggest if you could juxtapose a concept like divergence and then a concept like kill zones with the liquidity event concept, I think you could create a setup. Interestingly enough, too, if you were a very advanced trader, you should have looked at this chart pattern and said, gee whiz, Brian, that looks like a harmonic. And I could very easily see harmonic guys actually shorting that event and taking profits on a dip into these gaps here. In fact, I know one guy in particular on the site that he does this like almost all the time. You can see how actually this is right here. You can see how this was all Swiss cheese through here. These gaps, and remember our question from earlier, it's the same logic. Nothing ever changes. The market is just fractal by nature. So time frame is irrelevant. It's all the same shit, just different pile. So what a surprise. This, I think, just looking at this was a harmonic. Boom, 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 boom. And I know lots of guys that would totally short that fail right in there and actually take profits on these gaps being filled in here. So yeah, you could easily play this as a trading range. And the irony of it all is you could probably draw harmonics going the other way. This looks like a crab going that direction. So anyway, hopefully that helps answer that question. It's a good question, perfectly valid, and hopefully that helps you see kill zones. And I just pulled this one out of my ass. If anything, you guys ought to be going, wow, how the hell did he do that? He just grabbed a chart just randomly and boom, pulled up a kill zone, and we could literally teach a whole damn seminar just off of this one chart right here. Isn't that incredible? I think that's the side of a guy who knows his shit. Anyway, I'm just patting myself on the back. Nobody else will. All right, let's keep moving forward. I'm a bit confused about the 5% rule. Does it limit the total capital committed to any given trade or just the potential losses, i.e. risk? For example, assuming I'm adopting the Joe Sixpack risk management. So Joe Sixpack, by definition, means that you're going to risk 50% of whatever it is you're putting on the line. So if we have an absolute, and keep in mind, the 5% rule is absolute. I want that to sink in for a moment. This rule is, if I break this, I have to man up or lady up, as the case may be. And I have to admit that I was wrong, and I have to go into, holy fuck, my account is about to blow up. I better act, and act now. And, I just heard of another person who blew themselves up here this past week. I don't know what's, there must something in the air. Literally, since I've been back from Portugal, I've seen two people that I thought were on really, really good courses blow themselves up. And my day trading plan's been really wonky, and my solution has been more journaling, less real money betting, and more paper trading, because I put myself in the penalty box. So I wish I would actually hear more people say, Brian, this is a challenging environment for the particular setups that I'm trading. So I'm dialing things back versus I'm going to really force it and no, I'm right. And then the market goes and destroys your account because your ego gets in the way. So you just actually answered the question, and then keep in mind, this is absolute. I would prefer that you actually start off with like, I'm going to risk 2% in my account on any one given trade. And remember that 2% is the amount of your stake. So if I say put $10,000 into an account, all right, this is my trading stake. Then that means on any one single bet, I cannot ever let that bet go more than 5% against me, or basically $500. And what I would suggest you do is chop that in half and say, any single bet, I am not going to risk more than $250 or 2.5%. And then that way, if all hell breaks loose, you get a horrible fill on your exit. Let's say you're trading a futures contract, or you're in an option and there's just no liquidity and you have to take a totally crappy market maker fill on your option. Then you could actually double your anticipated loss, and still you have not broken that 5% rule. So just remember, the 5% rule is, and for like little old ladies, you can make it really simple for them and just say, look, you're going to give me $10,000 to open up an account, which really isn't that much money these days. Really, I would say you might, price inflation, you might want to bump that up 4 or 5 times. But $10,000, right? I am not allowed to lose more than $500 on any trade ever. And since I'm a little old lady and all I do is buy and just sit on it, then I'm just going to cap my purchase at $500 on whatever the hell it is I'm interested in. And if you're long only and you're a little old lady, well, you just buy $500 worth, and if it goes to zero, it goes to zero. Simple. Keep it simple, stupid. For an aspiring trader, and if you're saying Joe Sixpack, again, what I would start off with is 5% is the absolute maximum you're ever going to want to risk. So I would actually want you to dial that down. But let's say we'll use the 5% rule just for demonstration purposes. And that means if you started off with $10,000 and you are Joe Sixpacking, then you can risk 50% of the capital that you've put into an idea. That's what the Joe Sixpack risk management is. And that's what typically a lot of my Joe Sixpack customers, when I was a broker, would be able to handle. I'm going to buy 1,000 shares of XYZ company at like $5 a share. And maybe it takes like, let's say I've got, well, if you're going to do Joe Sixpack, it's just simple 50% risk. So whatever position I put on, if it's 5%, I've got $10,000, then that means 5% of that is $500. And I'm doing Joe Sixpack, then that means I can buy $1,000 worth of that asset. If it falls in half, then I have to walk away. It's just that simple. So your account size 10G, stock ABC is currently at 1,000, and a 2-to-1 setup is risk where the bottom of the W means I lose $500. No, because then you're trading on leverage. That would not be just the W. If I stick to the former definition of 5% rule, I can't take the trade since my max risk is $500, right? Because Joe Sixpack is just think of it, I'm going to risk 50% of my money that I'm putting into the trade. That's what Joe Sixpack means. Little old lady means I'm going to risk all of the money that I put into the trade. So if you're doing a W and the W itself is $500, then it's probably not going to be Joe Sixpack. Now, it might be. I mean, you might find that, and sometimes when I buy penny stocks, the W itself, like that IMIN is a good example. Where if I bought at 11 cents and it was Joe Sixpack, well, you can see that interestingly enough, the size of the W is just about 50% of my capital. So you can see the bottom of the formation is 6 cents. So if you wanted to Joe Sixpack that means you're going to have your stop at say 5.5, which means that technically I could buy at 11. All right, so I'm going to risk 50% of my capital, and I'm just going to go throw in what? I could go in and throw in, if I wanted to, I could go in and throw in 10% of my portfolio, which is $1,000. If it falls by $500 or 50%, then I better just get the hell out. So you could do that. There's nothing wrong with that. And I used to have a lot of people that basically this is the way that they would operate. If I stick to the former definition of 5% rule, I can't take the trade since my max risk is $500. Well, if you had a $10,000 portfolio, like I showed you, and you took 10% of that money, $1,000, and you put it into IID and you risk 50%, then that'd be $500. Then yeah, that would be basically Joe Sixpack. If the asset price is high, like BTC, I may not have enough capital to make the trade at all. Yeah, well, ironically enough, I showed you that I think you could actually, like, let's take your Joe Sixpack scenario on Bitcoin. And ironically enough, the 50% rule of the most recent sell-off is basically that $40,000 number. So ironically enough, if you bought at 20,000, I think you could realistically see a money double. Something like that. There to there, there to there. And so of your $10,000, you take $1,000 and you would buy $1,000 worth of Bitcoin, right? Which I guess would be about what, 0.05 BTC. You're going to risk 50% of that capital. So that means that you're saying, I'm going to buy at 20,000. We'll just use 20,000 as a round number, whatever the actual number is, you do the math. I'm going to risk down to 10 G's. So 50% of the capital. This is Joe Sixpack talking. And I'm going to look to sell half on a double. That's not an unrealistic Joe Sixpack approach. It means you're taking $1,000 and you're buying Bitcoin, that's spot, no leverage. You're going to risk 50% of that. And, you know, actually selling half on a double is just about a 2-to-1 risk reward. I really don't have a problem with that trade. So I don't know who asked this question, but does that help? If you are here, I may not have enough capital to make the trade at all. Well, no, that's not true. The great part about Bitcoin is you could buy like 0.00000000000000000001. Right? That was the big selling feature of Bitcoin. Was this Michael? Was this you who asked this question? Are you concerned about a bail-in? Well, yeah. I mean, it wouldn't surprise me. Let's put it that way. Do you need buried pirate chest of gold and silver to hedge from potential bail-ins by people like True Dope? Well, I can absolutely tell you True Dope is not going to be the one who's going to be making that decision. The bail-in will come from the top, and it will happen only after a massive calamity in the stock market. And it will take the form of what we saw there a couple of years ago. Should we debate mortgage? You got kids' future? Shut the fuck up and just give them the money. Right? And if you don't know what I'm talking about, go and look at what happened around the 2020 financial meltdown that lasted about 2 weeks. And then quick melt up. So, but the thing is I don't actually foresee seeing something like that again. What I foresee happening is, and this is just, purely conjecture. The socialists now are going to be on the run for the next 20 years. Socialists just had their heyday. That was their big hurrah. And I think the pendulum's going to start swinging back the other direction now. You could make the argument that the whole socialist movement really started with Ben Bernanke. And really what Ben Bernanke did was, I actually think, quite criminal. And there are people on the social media and stuff that have like politicians that have had speeches, especially some of the Australian politicians. You've heard me talk about Milton Friedman and his views on hyper printing money. And really, that's basically been the hallmark for pretty much the past 10, 15 years. That's an old story now, though. That's not a new story. The news story now is that the credit markets have turned, and the credit markets are reminding the socialist who's actually driving the bus here. And my hunch is that the Fed will continue raising rates until something breaks. And my hunch is it's probably something that's going to come out of Europe before anywhere else. I think the system is potentially breaking in Asia. But because of that, such an insane totalitarian dictatorship over there, I have no idea how the hell that's going to play out. My hunch is probably into the end of this decade, that whole region of the world explodes in a massive war that probably kills hundreds of millions of people. So there's an image for you. But ironically enough, I actually don't believe that the United States of America is the place to be considered worried about right now. I think the US Federal Reserve has a firm grip on power, which really means it's the bankster class has a firm grip on power. As soon as the socialists sort of rear their ugly heads where they're not really wanted, then they just knock down the bonds of the countries. You saw what just happened in the UK. And the banksters will just do this country by country by country. And my hunch is a country like Canada could be in really big trouble because Mr. Trudeau there believes that he is bigger than the market, and he's going to be reminded, the market's going to remind him who's in control here. Anyway, that will take place over the next 5-10 years. And the irony of it all is that we should see these commodity currencies trend lower for like the next 10, 15 years. And it will look worse, and it will look the worst at the very end of the cycle. So like Canada was a wicked short into the 1990s. And all through the 1990s, people bitched and complained about these things called the leaky condos. And if anybody remembers leaky condos, it was just an absolute anathema, but it was all the condos that were built in the 1980s that were turning out to be slightly non-waterproof. Now, what do you think the odds are that this construction cycle, these construction people have cut a few corners, and the development here in the Lower Mainland is just insane? My hunch is there are a lot of corners that have been cut. And I wouldn't even be surprised that a lot of the buildings that have actually been built up over the past 10, 15 years here in the Lower Mainland will actually have to, at the end of all this, be torn down because they're just unsalvageable. But we'll see what happens. Only time will tell. Anyway, that's my 2 cents there. So. Okay, so I hope I helped answer that question with regard to Joe Sixpack. You could buy Bitcoin with Joe Sixpack. Just understand, if you have a $10,000 stake, that means you can't risk more than $500 on the trade. Since Joe Sixpack risks 50% of his capital on any one trade setup taken, it means he can put on $1,000 trade. And if the trade goes against a 50%, then you better get the fuck out. Okay, moving on. Number 6. David Level 0. Good evening, Brian. Do you think the full moon in 2 days can be considered as a bullish event? This is it's the weird with sine waves, and I might argue moon cycles are the same as sine waves. What I've noticed is that markets will move in a cycle pattern for like 2 or 3 of the sine waves. And then all of a sudden, you know what it reminds me of? This is exactly what it reminds me of. I don't know whether I can show you this or not. Have you ever seen what happens when somebody tries to spin a screw in space? what happens is it goes along, and then all of a sudden it flips around on its own and everything goes the exact opposite. And I don't know whether you saw that. It'd almost be worth willing just, Chris, if you could do me a favor while I'm out with Liam, if you could just cut this little piece of this video, and if we could put this into the library, I think that assets do this a lot, is there's no explanation. We don't understand the physics of what the fuck is going on here. But this is a really good analogy where the market will just continue along. It will move along in this fashion. And then all of a sudden, everything flips on its head and it goes the exact opposite. I don't understand this, but I've seen this happen in the marketplace a lot. And especially when I do my sine waves. Have you ever seen me on the Wednesday shows? We do a funny little, hey, predict what the fuck's going to happen with Bitcoin next week. And 9 times out of 10, we're completely wrong, which is adorable, right? Because it just goes to show. And nobody, and like CNBC and like fancy schmancy subscription sites, nobody will ever talk about this because it just goes to show how completely we cannot predict the future. We're just terrible at it. But the point here is, like, on a weekly basis, I'll do my little sine wave and I don't understand. And maybe, this is the, kind of like how we figured out chaos theory. Maybe this is the next big secret that we have to try and unlock here. But what you often see happens in the market is, notice how we have a peak and a trough and a peak and a trough and a peak and then a trough. And then where the hell did the peak go? And now, what the fuck? Now trough is a peak? What's going on here? This thing, it followed it perfectly. And then all of a sudden it disconnected. And it actually went exact opposite, where the peak was actually the trough and the trough was actually the peak. What the hell's going on here? And the only way I can figure this out is it has something to do with this. I don't know if somebody wants in the comments or something wants to put a link to this this concept. This guy is smarter than a whip. He's so fucking smart. It's so cool listening to him. People who are really, really, really smart is they can take really complicated concepts and try to explain them to idiots like me. That's when somebody's really smart. So I don't know what this is, but my answer to you is it has something to do with this. And your question is, should the market and price follow along this moon cycle in lockstep? And my answer is that the moon cycle, of course, is very similar to that sine wave. Now, where the hell did that damn thing go? Where did I put it? Is it over here? Right? Yeah. I think I think there's even like a moon indicator or something on here, right? And this sine wave, of course, the moon cycle is very consistent. But something happens every once in a while with these moon cycles that everything gets flipped on its head. And like I said before, the only way I can think to describe it, it's this that's happening. That yes, everything's moving along uniformly. Your moon cycles are working perfectly. Sine waves working perfectly. And then all of a sudden, something happens and everything gets turned on its head. So, and yeah, this happens to us humans a lot in our lives. So you're right there, Michael. I don't know what it is, but this is definitely a very real force in nature. So my answer to you is, on balance, I have found, and all I can do is speak from personal experience, but what I have found is that yes, we move along with these moon cycles, and then every once in a while, everything just rotates like 90 degrees. And then all of a sudden, all your assumptions about what's supposed to happen, everything just goes the exact opposite. And you're like, what the fuck just happened? So that's my answer to you. So my challenge to you, David, is what is the name of this effect? And can we build an indicator on TradingView that could somehow take this effect, because I'm sure there's some sort of mathematical ratio here, and could we apply it to one of these sine wave studies? And then I think we actually have something to work with. So there's my answer to that question. Hope that helps. Give you food for thought. Is the indicator with your MAs available for level 0ers? You know, the MAs you can see under individual buy signals you review from time to time from TRI dashboard. Thank you, sir. This one. This looks like Willie. No, this is not Willie. This looks like the DI. Oh, so it's you know what this is? This is the DI built on with using PineScript. So the direct answer to your query is yes, you can build the DI on TradingView. You're going to have to be able to become up with to become a PineScript aficionado. Sharktoshi on the site, your level 1 TA, and actually he does pretty much the level 2 module on writing scripts. He's probably your best source on TRI for help on becoming a TRI, a PineScript maven, let's say. We did for the longest time have a real problem with creating the cumulative DI indicator, because PineScript had a really hard time combining the votes from different time frames that the DI works with, and then creating that composite index over multiple time frames. I don't know whether Sharktoshi, there is Sharktoshi over there in the YouTube page now. I don't know whether we've actually ever solved that. Frankly speaking, I would prefer that we don't go down this route. I would prefer that we just stick on the site and we use this wonderful tool that I've probably now, I would hate to say it, but you know, cumulatively with the salaries and the whole bit, I've probably invested $1 million in trying to get this damn DI index working to the point of my satisfaction. I spent a lot of money over the years on this, but you know, to all intents and purposes, it looks like it's working, so I guess it's worth it. Having said that, could you build it on TradingView? I suppose you could. You know, if anything in that level 3 program or level 2 program, that module in the level 2, Sharktoshi will clearly illustrate that it is not easy. This is very, very difficult work. So my answer to you, David, is if you do want this tool, at the bare minimum, we ask you to have gotten through the level 2 program. And then Sharktoshi, along with my work that I did on TradingView years ago, he will share with you how to do this through PineScript. It's a very, very steep learning curve for you. So if you are a coder, awesome. Sharky, there he is over on YouTube, and he says the dashboard is sex. Well, there you go, like that. You maybe comment to David here, just really simply, I think you have access to this document. How many years have you been banging away trying to build your algos on PineScript to actually get them to work? I think if I understand, it's a huge investment you're going to make in teaching yourself how to use PineScript. And as I said, the beginning, 2019 says 2019 years it took for you, or is that number of days, or is that number of hours, or that's how long you've been working on it? I'm going to say, to make it easy for you, David, sign up for the dashboard and you just get it given to you. I mean, that's half of the proprietary indicator kind of conversation. I mean, really, I don't want you building the DI on TradingView. I don't think it does nearly as good of a job as what Stuart has done. And then furthermore, you're never going to find on any platform what we've created here with the breadth indicator, because this is the application of the DI, which is something that technically you could build on your own, but then the application of that DI across the entire universe that we follow. And I've never seen this anywhere, and I don't think you ever will see this anywhere. The closest I've seen is some people have done it with point and figure charting signals. On the classic stock market, it's a bullish percentage index. You can look into it, how it's created and built, but using something like the DI to do this, never seen it anywhere. So anyway, hope that helps answer that question. Yeah, I got to get going here, don't I? All right, let's see if I can answer. Can you take us on a tour through the TI dashboard and show us to look for it on these level oneers? So to answer this question, this is a pretty easy question to answer. Josh has asked me to put together a nice little sort of half-hour walkthrough video. I did, and the problem here, of course, too, is that the dashboard and the indicators and the information that are on here are constantly changing as we're sort of bringing this thing online. Keep in mind, the whole darn site is still very much a project in development. You can go into the library right now. We have website walkthroughs, and it says TRI dashboard walkthrough introduction. So this video is about 57 minutes or 51 minutes, beg your pardon, in length. And you can see how basically I just walk you through the dashboard in its version that at that point we had up and running, which is pretty close to what we have today. There's a couple things that have been changed, and I might go through and just make some alterations. But to all intents and purposes, I would suggest you use this as a starting point. So that makes it nice and simple answer for you. And what I would also say too is this is an ongoing project. And there should be new videos that I make in the not too distant future to sort of juxtapose with that. Okay, and then finally, somebody beating a dead horse, 5% rule and concentration risk. I know someone whose father passed in the last year and they inherited, let's say, $1 million. Real estate seems overpriced. The traditional stock bonds seem outdated. You don't seem particularly smitten with precious metals. Cash right now seems to be king, but only at this particular moment in time. Cryptos, meanwhile, look like we are in a very washed out nanny nibble zone. How would you deploy a recently acquired $1 million into the market with a little old lady approach and a crypto bias? Would you buy any particular silver and gold in this current market state? So first things first, what you probably should do is go and throw that $1 million into some sort of T-bill account or something along those lines. I did see that some of the financial planners were getting super excited that down in the States, I don't know what country you're in, but down in the States, they have these I bonds that are, you can only buy like $10,000 worth of them a year, but they're paying like 9%, 9.5% right now, which is a ridiculous rate. And there's an old adage in the market that's it's the rule of 72. Your money will double in value at 7.2% interest every 10 years. And so a lot of people use that reference and that benchmark when investing. If yields on fixed income, which are guaranteed investments, are greater than 7.2%, then they are clearly the preferred investment proxy. I don't know whether you're making an awfully big assumption. You say, look like we are in very washed out nanny nibble zone. Okay, that's fine, but could it stay that way for a little while? especially if you guys are spending all your money on here's 1bsex.xyz hot girls for you. So if you guys just keep going and spending all your free money on these idiot porn shiller zombie bots, well, you better have something that's guaranteed investment, because you don't know whether the risk market. I mean, are people buying these sex bot services, or are they buying cryptocurrencies right now? I get the feeling that, I mean, this is the third bot here. And if Johnny Hoagland's not going to buy them, you know that Brian, there's no fucking way he is. And yet they just keep shilling. Somebody here must be buying. Why would this idiot still be here? And what's fascinating is now they have 3 different personas that they're working our channel off of. So it must be profitable. Some of you must know. Anyway, I'm just being stupid. So I don't know, maybe invest in hot girls for you bots. Maybe that's the growth industry going forward. I'm just being facetious. So I would definitely say that, yeah, no wonder we're all going broke, right? I would say first and foremost, you know what actually I think is the better way to play this is, this is a huge conversation unto itself. So, I mean, if you're talking seriously $1 million, then really you want to think about bond laddering. You want to try and take advantage of the entire yield curve. So, like I said, the I bonds right now, they're like, I think they're 10-year bonds. They might be 20-year bonds, but paying 9%, Jesus, that's attractive. That's a big number. Hell, I might even go buy some of the crappy Canadian bonds with the cash that I have in my account. That's what we've been waiting for, right? And the iron, like, gee whiz, you think that the economy is doing well, maybe you should go watch this video. Whoever put this comment here, and I don't know whether you gave your name, I think you better go watch that video. And you might have a change of attitude after seeing that video. Don't assume that we have bottomed yet. Remember Mr. Benner, right? And the tweet that I put out to that effect was, Benner cycle bottoms in 23, right? That's what all your mouse pads say, right? Right? Because you all went and got this mouse pad, right? But you can see that says 23. That doesn't even say 22. That might be December 31st, 2023. That would suck horse cocks, eh? So we still got another year to go on this bear market. Don't kid yourself here, folks. The note that I put out, I don't know whether I said it here. This is shocking because, frankly speaking, I mean, I look on the road and it shocks me to no end how many new cars there are on the road. When I was a kid, most of the cars I remember were like built in like the 60s and 70s and stuff, and they were the old clunkers. Don't we all remember the family station wagon that was just an absolute embarrassment? I could just show you the station. I remember one station wagon that we had, and that thing was just a monster. It was a big, red, ugly motherfucking Ford, just the biggest, ugliest. And we had that station wagon forever, You just don't see those. Every single bloody car on the road is brand new. And through that whole COVID nonsense bullshit market, it was like people, and this is why these damn socialist governments always fuck us, because they goaded everybody into thinking that money was free. This lady here is telling you, just take the time while I'm out with Liam and just listen to this. There is a major, major fucking train wreck coming down the pike, folks. Major. I mean, I suppose it's no accident Josh posts their 2014 Musk. You look at that Tesla stock, I think Tesla's a short. So, I get the impression that yes, we're going through a counter trend rally. And of course, all of our research, and gotta say, man, we do some fucking killer research here at TRI. But all of our research said that this needed to happen. That we basically spent pretty much the whole year just going down, puke out central. We were due for some sort of bounce. But is this the start of a new bull market? Keep in mind, there are the highs, right? The blue dotted line is second year new Democrat president. So there are the highs from the summer. And this dead cat bounce that's supposed to happen here into the end of the year following the election on Tuesday, it doesn't even take us back to those summer rally highs. So don't kid yourself, folks. We are not in a new bull market. There's no signs whatsoever that the bear is over. All I see right now is this is just nothing more than, there's still a US dollar index like I was talking to you guys about there just a moment ago on the weekly price chart. When I do the weekly commodity trend survey, when I did the currencies there a week or two, and I didn't do it yesterday, I just said, fuck it, I'm taking the day off. So my apologies, but look how old that move is, 72 bars on a weekly price chart. That's crazy. So even if we spend maybe just, better part of a few months just cleaning this up and then maybe getting ready for the next leg higher over here, it's a bit overdue, right? And, the whole idea that we rally into the end of the year on the risk assets means that maybe we trough on the US dollar into the end of the year. But there's hell, moving averages aren't even anywhere close to rolling over. So my hunch is that there's still a lot more pain to go. So do yourself a favor. Do whatever you do yourself a favor. Do not open an account on these assholes, shitter cocksuckers. I can't believe they're in there actually sponsoring this guy. I don't know who this guy is, but if anything, I was almost like, I was going to post a comment on here. Great interview. Love the conversation. Why the fuck you're dealing with these crooks, I have no idea. Probably going to get sued over it, but they stole a ton of assets from me with this whole delisting bullshit. And where are those coins now? They're sitting in their treasury collecting POS coins is where they are. I'm very, very disappointed in the way that, and like our whole TRI community, so many people lost so much money from these guys. So I was shocked when I saw that these guys are actually sponsoring this guy. Couldn't believe that. Ugh, terrible, terrible place. Anyway, no more comment on that, but I will say that this was a very good interview. I really liked it. Very good interview. So don't kid yourself. If you listen, her face says it all. There's more trouble to come here, folks. And also too, Mr. Powell there said, we're not done raising. I'm not quite sure what would make people think that they're raising. So if anything, what I like is you take your $1 million and you go and park it in T-bills, and T-bills are actually paying you a half decent rate now. Maybe you park it in like 90-day T-bills. And I like the idea of you just slowly, and that's the key word here, slowly just going and picking off good investment ideas. So do you want to put yourself on maybe a dollar cost averaging plan to acquire a position in Bitcoin as we go through this 4-year cycle trough? I think that's an excellent idea. So what's 5% of $1 million? That sounds like to me to be about 50 grand. So you want to nanny nibble and just slowly work your way in. Maybe you set yourself up over the next 10 months. So that'll take us into the end of next summer, which I think is probably appropriate. Once a month, I'm going to go and buy $5,000 worth of Bitcoin. I think that's a perfectly fine idea. Boom. You just took care of 1/20th of your portfolio. frankly speaking, I kind of like those I bonds. They're pretty darn attractive. 9% annual yield, guaranteed by the government. I mean, keep in mind, you see what's, you know, you want to see how dangerous this world is. And keep in mind, every single asset in the marketplace, including your beloved Bitcoin. What would happen if you went and listened to Winnie the Pooh about buying China there? And remember, he was all rah, rah. I mean, it really, over the whole, damn 15, 20 years. Is there any guarantee on this asset being a buy, a floor? I mean, you see what these prices are. And of course, everybody always buys at the top of the market. Half of your money gone? If you had chased it up here and now you're sitting long, half of your money is gone? Is that a wise decision? From a financial planning perspective? No. You know what I would suggest you do, Mr. Smarty Smarts? Money bags. I like the idea of throwing yourself on a dollar cost averaging plan, 5% of your portfolio onto Bitcoin. I think that's an excellent idea. I'd get started on that today. But that doesn't mean you're putting all of that 5%. That means you're putting in $5,000 once a month for the next year. And I like that. And if anything, you're routing lower Bitcoin prices, please. Lower, lower, lower. Keep taking it lower so you can buy more with that $5,000 every month. I love that idea. I like the idea of them going and buying 10 G's worth of those I bonds that are paying you 9%. Start billing out your fixed income side of your portfolio. I also like the idea, and this is where you get into smarty smarts, because like this lady says, I think there's going to be trouble ahead. So if you really want to invest in equity, I think the way to go is index linked notes. So these are government, well, sometimes they're government, sometimes they're like large institutions like bank guaranteed and stuff, insurance company guaranteed. Of course, then you get into, wow, what happens if the banks go under? I don't think that we're in a situation where you're going to see bankruptcies. I think we're in that too big to fail. And worst case scenario, US government just says, well, we got under the guise of the Fed. Well, we're just going to have to start quantitative easing again, and I wouldn't be surprised if that has to happen again. Having said that, I think that there's enough room in the interest rate curve where if there is a stock market crash, we might see them cut interest rates in half. Take interest rates down 2 full percent. They can do that now, and that will be their sort of emergency out if they need to. I think that the money printing days are over, but we'll see. Only time will tell. Gave you a few ideas to consider. What I would also say, so I like the idea of thinking about index linked notes, and in the level 3 program, of course, we go into a lot of those kind of conversations in the derivatives. You might want to consider convertible bonds, convertible preferred shares. I like those as building out your fixed income side of your portfolio. The irony of it all is fixed income right now looks like absolute poop. And, we always say, this is the only business when stuff goes on sale, nobody wants to buy. So I look at that. Does that not look like a market that's going on sale? So I run, and I don't know whether you believe in the U.S. government or not, or whatever your local government is. Odds are probably the governments themselves are not going to go under, but who knows? But kind of like your I bonds kind of talk. I got to tell you, the people who really are, hate to say it, the suckers of the world. They're the ones that bought U.S. Treasuries up here at $170. How do you think they're feeling right now at $94? And the interesting thing about $94 on this bond price is you're actually going to, if you do go and price bonds right now, this would be a bit more advanced, but you're probably going to find you're going to buy bonds that are trading at a discount to 100. So in a weird sort of way, if you can buy below $100, remember all bonds mature at par. So you can actually build in a capital gain on this investment as well if you just simply hold on to the bond to maturity. So ironically enough, there's a guy that was on the internet a while ago and he called himself the Bond King. And I don't get it. I don't understand it at all. I get like 50 views for my video. Look at it, there's 53 people watching this video. I was screaming at people, for God's sakes, do not buy bonds here. You are absolutely crazy to be buying bonds in here. Mr. Bond King, buy bonds. They're the best. Yeah, they're the best. And I even showed him, and it's so sad, and I've said this a few times. And what time is it? Actually, I got to get out of here. I think I'm going to wind up on this. Long and short of it here is I might consider starting to seriously look at the bond market for actually part of this asset allocation. So I do like the idea. You got your $1 million, throw it in T-bills. You're collecting 4 or 5% right now, which is perfectly fine. And as you see ideas come up, then you actually think about buying. And, if you want to get yourself working on a Bitcoin dollar cost averaging plan, I don't have a problem with that. But just make damn sure if you're going to do the dollar cost averaging program, don't go and blindly believe a lot of these crypto stories, because it's almost impossible to figure out what intrinsic value is on these assets. And if you can't tell me what intrinsic value is, Bitcoin cost of production is intrinsic value. Something like Ethereum, there is no intrinsic value. On all of these DeFi protocols, I got to repeat this loud just so you all hear it. On a token, there is no intrinsic value. It is just a token. If it's really popular, the value of the token will go up. If nobody's using it, or heaven forbid, this lady's scenario plays out and most of you are bankrupt in a year or two, who the hell's going to buy the damn thing? There's nobody has any money. So what the hell's the intrinsic value of your idea? That's why I can justify Bitcoin. And it's why I can justify U.S. Treasury. I think, at the end of the day, U.S. government will honor its debt obligations. It will, of course, hyperinflate the currency and standard of living will get destroyed, but it will honor its debt obligations. Go slowly. Until we are on the other side of this image, everybody, please listen to this, for God's sakes. And this is probably why we just don't have that many people who follow this, because I just try and tell you guys the truth here, which sucks and nobody wants to hear it. Where the hell is Mr. Benner? Benner, there he is. Until we are on the other side of this 23 event, and I could show you a bunch of other things, Bitcoin halving cycles, the short-term money market cycles. I mean, just keep it really simple. Mr. Benner fucking has this nailed. It's so perfect. And you all have this mouse pad, right? If anything, what I said, I thought it was so perfect, was, man, we have built the most coolest merch shop for stocking stuffers. If you ever wanted to think about something to buy Dad for his stocking, then he'll look at it and go, damn, that's cool. I mean, this is it. It's so perfect. I mean, it's just so perfect. And really, $10. What the fuck? That's not really that much money. But this mouse pad, I mean, I bet he'll sit there Christmas morning and he'll just be absolutely enamored with this. And he'll be looking on his computer, looking at all the price charts and going, God damn, this guy was right. I mean, this is so, and then to add insult to injury, this is so cool. This cup is just incredible. And I've got one of these cups, right? It's right here. There's my cup. You can't really see it. Anyway, there it is. But this thing is just so, it's like a whole damn cheat sheet for the stock market on a cup. I mean, you want to quit shilling this stupid goddamn porno crap and get in here and shill this. I'll give you a 5% commission on this. This thing should be in every warm-blooded male's stocking this Christmas. No ifs, ands, or buts. And actually, it's not porn. Now what the hell are they showing? My son slept hungry today. So now you're working the emotional angle. So they loaded up the bot and they went, geez, this guy's tearing our porno bot apart. I know. Let's work the empathy angle. Anyway, is what it is. Point here is this cup is so freaking awesome. This thing should be in every. I mean, it's just so cool. I know that's a terrible shill, but I tell you, if I got that in my stocking, I'd be like, damn, thank you. That is so cool. So anyway, to finish off the broadcast and to come full circle on this gentleman's question, go and throw the money in the T-bills. Slowly accumulate. I don't mind those I bonds. They are paying a really fucking nice rate of rate. That's building out your fixed income side of your portfolio. Because bonds are so cheap, I would really look at things like index-linked notes. I would really look at preferred shares. I would really look at like convertible debentures, convertible preferreds, index-linked notes, all those kind of plays. That's the way that I would suggest you play the market. Then, like I said, you want to take 5% of this stake and you want to just start dollar cost averaging into things like Bitcoin, understanding that the cost of production is still a bit lower than where we are right now, but you're not really too concerned. You just want to get long Bitcoin, a chunk of this. I have no problem with that whatsoever. And then the rest of the portfolio, go slowly. Come into the lounge, post your weekly W's, come into, I don't know where you are in the course. Sounds like you're still maybe in level 1. So just keep working away through the course material, get to level 3. So then you can come into the TRI Secret Options Formula Club and you can start talking about advanced strategies. But really, to keep it really simple, I would say do exactly what I said there. T-bills, you want guaranteed rate, 4 or 5%. That's very attractive right now. And you're just going to slowly start accumulating things. There's no hurry in this particular market state. You want to take maybe 5% of that portfolio, 50 grand, and go and have some fun in the market with that 5% and build a 5% risk plan around that 5%, that one little chunk. And we'll call that's my speculative part of the market. And 5% of 50 grand means 2,500 bucks. You want to go and buy like 20 different altcoins, 2,500 bucks a piece, and just sort of build a little mutual fund. And each of those $2,500 cars, you're going to trade the setups and stuff that we teach you on the site. Nothing wrong with that. But that's not playing with this $1 million chunk. That's playing with only 5% of it. So that's the way I would probably suggest you approach. If you actually wanted to be speculative, take 5% of that, and that is my speculative money, and I'll go fuck around with that. The rest of it, either in things like T-bills, those I bonds, index-linked notes, convertible debentures, convertible preferreds, and then case by case. Now we've allocated 5% of the million, 500,000 into a Bitcoin dollar cost averaging plan. We've taken 5% of that million into an altcoin shitcoin plan. That means 2,500 into any one idea into that. So already we've allocated about $200,000-$300,000 of your portfolio already. The other $600,000-$700,000, I would leave it in T-bills, just keep collecting short-term interest. And as the weekly W's start appearing on big blue chip names, things like Microsoft, Intel, Tesla, if you so desire. I mean, I think you can do way better in other ideas, but that's here nor there. You're just going to slowly add over the next year or two. That would be my suggestion. Okay, hopefully that helps. I got to get the hell out of here. Off to be with the boys. So please, everybody, give Liam and I a nice karmic wish going forward. If there's any sort of follow-up questions to this, yeah, but Brian, this, please write them down. And Chris, just remind me to take a quick boo at this in tomorrow's daily brief, and we'll come full circle and take a look at that. All right. I think we'll leave it at that. Have yourselves a great rest of your afternoon. Please give me a big karmic PMA shot in the arm for Lily. And, the only thing left for Brian to say here at this point is bye for now.